Good day, crypto trader. Bitcoin price rally this week is just a mere drop on a hot plate. Bitcoin, BTC, price rewards brave bulls with gains for the week after price action finally pushed back against the bear trend where Bitcoin is in. Unfortunately, a weekly price chart does not show a nice picture with no signs of a turnaround. Instead, a squeeze to the downside continues with lower highs, set to see BTC price say goodbye to $20,000 for the last quarter of 2022. BTC price is getting chopped by the bond market. Bitcoin price is undergoing a harsh law in economics, finance, and investing as the cash drain out of cryptocurrencies continues. Investors are switching their attention towards U.S. Treasury notes that are currently paying out roughly 3% or more on yield as the U.S. Fed keeps hiking, making bonds more and more attractive as a product of investment. Why would one still pour its money into cryptocurrencies that are having their worst performing year in their existence while safe government bonds return you over 3% coupons? BTC price thus is not in a sweet spot against the current macro dynamics that are seeing investors flee into safe havens. Expect price action to decrease at the high while the low end gets further pushed against $19,036 until it breaks. To the downside, BTC could go as far as $16,020, where the new monthly S2 support for September falls perfectly in line with that level. Markets and Bitcoin believers require a bullish signal from their favorite cryptocurrency. The green weekly close would already be a good sign, and should BTC price break above $22,000 and close above the 55-day simple moving average, SMA, something significant would have changed in the price dynamic in cryptocurrencies. Not that $28,695 or $30,000 would be back in the picture, but at least $26,000 would come back to play in the medium term. Shiba Inu pulls a bear trap but needs to watch out for next week. Shiba Inu, SHIB, price has pared back incurred losses from last week and is trying to squeeze out bulls that jumped in on the drop below the 55-day simple moving average, SMA, at the end of last week. With that bear trap, bulls are trying to lengthen the pain trade a little bit more by trying to trade at higher prices. But bulls need to watch out as a weekly rejection could be occurring at $0.00001276, which could trip price action back below the 55-day SMA and another leg lower in the coming weeks. SHIB price sees bears and bulls playing tit for tat. Shiba Inu price is hard to define or tell whether it is playing a bull trap or a bear trap. Either way, it seems that bears will pull at the long end of the straw and will have their way if bulls stay unable to break the high of the last week of August at $0.00001492. A fade could be kicking in soon, which could already be next week, as bulls look unable to eke out more gains and print new gains for this week. SHIB price is thus set to undergo rejection and slip further away into next week as markets will focus back to what counts, central banks. With another central bank, the ECB, lined up next week to hike 75 BP as the US Fed, more tightening will be triggered, this time on the European mainland. That means another big block of investors cashing in and draining their cash from cryptocurrencies, with SHIB price set to slip back to $0.00001000 with the new monthly S1 support for September as a platform. With the weekly close above the 55-day SMA, bulls could still be more stubborn as thought and could be seen setting forward their attack on that $0.00001276 level. Should next week be closed above that level, expect to see a third consecutive winning streak with September becoming an overall profitable month and probably even ticking $0.00001600. That would be a 30% gain spread over roughly 3 weeks. Litecoin goes against the current and is in a bullish triangle play. Litecoin, LTC, price could be set up for a very bullish ride, while most cryptocurrencies are under the scrutiny of the stronger dollar and the dire economic environment. From a purely technical point of view, Litecoin is trading in a very bullish pattern that is still holding and does not look to break down anytime soon. Expect to see the grind higher with a definite break to the upside near November. LTC price moves bullish despite the current market conditions. Litecoin price is set to jump another leg higher as it is set to reclaim the 55-day simple moving average, SMA, as a false break triggered a bull trap, where the green ascending trend line saved bulls from more downturn and losses. As this week, bulls used that same trend line to bounce off, this time, bears could be in for a surprise. Additionally, with the start of a new month, fresh pivots are set, and the monthly pivot for September is bang on the current 55-day SMA at 57 cents. LTC price thus can reclaim a very important area as long as bulls can trigger an opening above that level on Monday. With the relative strength index, RSI, still subdued, it would be the right time to finally let Litecoin price trade higher to give a little pushback against the bearish strength for almost 8 months. From the formation on the chart, it looks like a real breakout of the bullish triangle is foreseen near November. Sooner or later, traders in Litecoin could be caught up by reality, and once LTC price becomes correlated with global markets, price action could take a huge step back. Expect price action to be pushed against the ascending trend line near $52. Once price action trades below, a full unwind of the rally will occur, with Litecoin price set to trade near $40. Cardano price nears its end game as September promises to be the worst month for ADA. Cardano, ADA, price action might be seeing bulls fighting back a little bit with a green candle again for the week and at the start of a new month. That is as far as good news goes, as it does not look like ADA price will be able to close the week above the previous week, and thus instead simply keeps continuing to trade in the downtrend that is squeezing bulls against $0.415. Risk to the downside comes with the possibility that the Fed will step up its rate hike plan, triggering an even stronger dollar and adding another wide range lower to the ADA price valuation. ADA price set to trade 80% lower by November. Cardano price looks no match and is not up to the task of trading profitable in this current macroeconomic environment. With still elevated inflation, wages are being eroded with little money left to spend on cryptocurrencies. The first cycle of that cash draining triggered the drop for Cardano price action to slip below $1. ADA price has been finding a floor near $0.415 as that level caught a falling knife in May and saw bulls try to trigger a bounce off that level this week. Unfortunately, that bounce is not strong enough, and with the 55-day simple moving average hanging over the price action as a cap, price action looks set to slip lower in the coming weeks, with first up the monthly S1 at $0.383, which falls in line with that falling knife low of March. Based on the monthly pivots for September, losses could go as far as the monthly S3 near 20 cents, with $0.075 not far away anymore, and possibly be tested by November if the current dire economic situation persists. A strong signal to the markets would be if Cardano price could start the week with an opening above the 55-day SMA, near 50 cents. Bulls would jump in on that level as it will act as new support nearby, and offers a possibility to rally to $0.600 near term. Longer term $0.715 would be forecasted, although that would mean that something substantial changes or that cryptocurrencies are fully dislocated from the current macroeconomic backdrop.